Hey guys, welcome back. In this video, we are talking about the next short collapse, the hidden swaps, how it's game over, and many more in this video. First, we're taking a look at this. Bill Hwang used swaps to blow up $100 billion worth of hidden leverage. Now, regulators are concerned it might happen again, but it never stopped happening. It just got better lighting and a new QSIP. Our kohrs is a preview. The real fireworks are still queued up. Now, essentially what this is that right now people are worried about the hidden leverage. They're worried about the swaps, and they're especially worried about how this is going to happen again. You can see investors and regulators at odds over threat posed by hard to detect debt. We talked about many of the swap positions, and like we've said, swap is kicking the can down the road. Essentially, it's a problem, but they prolonged it to make it not look like a problem, but it doesn't take away from the fact that actually it is a problem. Now, as complicated as this sounds, everyone knows what's happening. But the problem is that people don't want to point it out. People are saying that it's hard to find, etc., etc. But we, the apes, have already discovered it multiple times over. We talked about new QSIPs, we talked about swaps. Just our previous videos, we obviously talked about the AMC swaps that's existent from 2021. And so right now, they are extremely worried about a short collapsing because of all the margin requirements, because of all the collaterals that have actually gone to zero. But this time, it's going to be way bigger. Now, last time, the whole kohrs situation was already very, very big because of the after effect that it had. In the moment of when we found everything out, we already thought it was a big deal. But as you guys can see, it took down companies with it. The kohrs swaps that went to Credit Suisse took down Credit Suisse, which were then inherited by UBS, and now UBS is on the verge of course, bankrupting as well. So people are really realizing just how big of a problem these swaps positions are, and so they don't want it to happen again. And you can see why swaps exist in the first place, and about why shorts are worried the most. Counterparty short ownership. So this is the mechanics of hiding shorts via TRS, total return swaps. In a TRS agreement, the hedge fund gains economic exposure to an asset's price movement without owning it. The counterparty directly holds the short position on their balance sheet, so this allows no regulation show reporting requirements for the hedge fund. Also, synthetic prime brokerage. Hedge fund effectively borrowed prime brokerage privileges through TRS. Counterparties internalize orders using their inventory to avoid public short sale reporting. No FTDs appear on the hedge fund's books. Position fragmentation. By entering multiple TRS contracts with different banks, funds can avoid triggering the 5% ownership disclosure threshold, hide aggregate short exposure across counterparties. So let's take at these three things of the mechanics of what goes on when people are hiding shorts via TRS. And you can already see just exactly what is going on. Firstly, we talked about how they're worried about AMC on FTD list. You can see no FTDs, no need to report it, and just many things over. We can also see counterparties internalize orders using their inventory to avoid public short sales reporting. So once again, does this sound familiar? And again, when you go back into the past, we talked about how Citadel internalizes their orders because they don't want the pressure to, of course, hitting the market. We talked about how they use dark pool for the purpose of not letting the actual orders hit the lit market, and of course, to avoid the public short sales reporting, and also avoiding the 5% ownership, just like we've seen how they tried to fight back against anyone who had a $10 million position or more in terms of short positions will have to report it every month. They obviously fought back against it, and this is why they're doing so, because they need it in order to continuously suppress AMC. So these are the very reasons for why they are using swaps, and is why we've seen that there is an abundant amount of swaps in the first place. And these very swaps are what obviously caused the kohrs incident, and that's why they're extremely worried about this. You can also see 0% AMC stock every day pre and post market. AMC's orders do not get processed, they are parked, rerouted via dark pools, etc. If AMC is not an enormous risk to Wall Street, why has it been manipulated for over 4 years now? I know what I hold. Now, we've already highlighted one big factor of AMC in terms of how it's a problem for the shorts. Obviously, the swaps in which we talked about. Now, another thing is just about understanding why there's just so many obvious indications that shorts are worried about AMC. The very fact we are seeing this very, very little movement in AMC shows us what's happening in the market right now. You can see AMC is up 1.13% today. Now, this is something that would be considered normal had it not been for 3 consecutive days of 0% movement, moving into 0.37, 0.37, and just these very, very minor percentages. Now, again, like I said, this normally is very, very normal. But the 3 consecutive 0%, we talked about, the odds of that happening is 1 in 1 trillion. And when you just pair it up with all the constant manipulation that happens in AMC, we know that shorts are obviously trying to suppress us. Now, it's no surprise because AMC is around $1 billion market cap. 60 plus million shares are shorted. The DTC are about 10 days. Fundamentals are improved. 85+% of exchange. Earnings in 5 days. Just ridiculous. This is game over. Now, the reason for why this is, again, all of these information we've talked about. Just yesterday, we saw 85% off exchange. That is just the kind of the most blatant way the shorts have used in order to suppress the price. But they were really worried about what's to come because we talked about how AMC has drastically improved the fundamentals, how AMC has drastically improved as a company, and that's why they are worried. You can see April 2025 box office, a colossal 873 million, up 102.9% from last year. It's the 4th biggest April ever. Movies are back. So this is just the indication of understanding what we should be expecting. Everyone saying that movies aren't back is clearly wrong. Now, one thing that we have to take into consideration when we're comparing to last year, but it's also about understanding just how important this is as well, is obviously we're up 102.9% last year, but you have to understand last year was affected by the strike. Now, this clears up 2 things. Firstly, people completely disregarded the strike for AMC last year, and they said that AMC was just failing, period. The box office was just failing, period. But clearly we can see that is not the case. The moment there is no writer strike, no actor strike whatsoever, we're seeing AMC improve. And so we're seeing the box office improve. And so that's very important. The second thing is about understanding how the very fact that box office are coming back, the very fact that we are seeing these records being broken should show you how AMC have put themselves in a very, very good position. You can see, I wish I was joking, but virtually all AMC trading is now done off exchange. Think about this for a moment. I've never seen anything like this in a lifetime of trading. Unreal. Anyways, off to buy more at these prices. So we have to first just really realize just how ridiculous it is. But again, we understand. If they aren't worried, if they aren't trapped, if they aren't scared about AMC price movement, they wouldn't be doing all of this. So that means we are on the right path. That means everything we've said is, of course, correct. Now, not only that, what we also have to realize is that despite where AMC is at with its price, people are constantly buying. And that itself is a very, very positive thing because that shows us how confident the investors are. That shows us why shorts are continuously worried, why shorts are continuously trying to suppress us, because they understand that in the short term and the long run, they can't beat us. And so they're just really praying, they're just trying to do everything they can and really just gambling on the fact that potentially, maybe all retailers will sell. But of course, that's not going to be the case. And what's even more worrying for these shorts, you guys can see, breaking, Doge to expand presence at SEC in the coming days. A source within SEC said the organization could use the full Doge treatment, with employees barely showing up for work. That's the news we've all been waiting for. So you can see Doge expand presence at Wall Street regulator. Now, this is something that obviously needs to be done. And the very fact that if this were to be true, people are saying that they are barely showing up for work should just show you how ridiculous this is. Retail has been fighting forever for transparency, for equalness in the market, and has not gotten anywhere with it, despite all the proof in which we have shown. Despite everything that has happened in the last 4 or 5 years, And this is the case, is because SEC employees are apparently barely showing up for work. But if we are able to see a audit of SEC, a transformation of the SEC, and we're seeing regulators that are willing to help out, not just the retail, but actually help out what is right, stopping certain institutions from manipulating the market, from exploiting the market, from taking from the retail, then that's what we need. Because we will be okay to admit if we are wrong. The problem is we aren't wrong. We're just being suppressed. We're being exploited by these institutions. AMC clearly, fundamentally, should not be at this price. And so that's why we want, of course, the fairness in the market. But yeah, guys, thanks for watching this video. I'll catch you guys next time.